Tom, I'm going to put up what I think could be the long side of a pairs trade. I know you like to do pairs trade. I'm going to let you explain that, but we've had a bullish rating on another electronic payment stocks, PayPal, of just recent vintage. The stock's been a powerful performer. The institutions, the smart money have been accumulating it, but it's really just since late April with the stock down around 104 that all three of our approaches to the market lined up. And then we got this oversold buy signal. This is really simple. I owe it to an old mentor of mine, Larry Williams. Stock that you like makes a new 8-day low. You're looking for a low risk entry point. This is your entry point. Works about 60 to 65% of the time, and especially when the market's going your way. So I identified this as a potential long, and then I used our stock discovery engine, which is a unique way to find similar stocks or stocks that are very different. So I populated it with PayPal. And on the top row, I see a lot of stocks like PayPal, but right under that, I see similar short sale candidates. One of them is Square. And if we look at the chart of Square, we see that opposed to making new 52-week highs like PayPal was, you have a stock that's had a bearish rating since October and is closer to its 52-week low. So when I was looking for ideas that Tom and I could riff about, I said, Tom, do you want to talk about a potential pairs trade in PayPal and Square? And he said, yeah, I'm up for that. So Tom, why don't you take the screen back and show people what you're seeing in terms of potential for a pairs trade in something like Square.
Sure, I'd love to. So, and again, these are interesting stocks, but for different reasons to us than they are for you, which is the beautiful thing about that market. Is that's why we have a market, and that's why, you know, that's why we get to do what we get to do, because everybody's watching the exact same movie. So, and there needs to be two sides to everything. So I would look at both of these stocks, Square with an implied volatility rank of 7.2 and PayPal with an implied volatility rank of 14. I'll just throw a quick chart up here just for a second, PYPL of 14. But obviously PayPal on its high and Square on its low. I'm not fundamental or I'm not technical, but I am a contrarian. So the first thing I do in a case like this, and I just did a tiny bit of homework before coming on today to this webinar, was I just looked at the longer term correlation between these two to see just, you know, are they inversely correlated or are they, you know, reasonably correlated? And the correlation over the last year and 6 months is about 0.64, which makes them, you know, slightly positive correlation. It's healthy enough that it's definitely a tradable pair. And we would look at this because of the ridiculously low IV rank in both, and suggest that neither of these candidates are a short premium play for options. In other words, in order for us to create the highest probability trade, it wouldn't be direction, it would be based on, and again, this is a little bit different than what you guys do, but I respect, you know, both approaches and both set of mechanics. But our preference would be to sell options into what we consider to be a pairs trade. A pairs trade is just looking for some kind of a divergence, looking at some kind of a divergence in price and making a determination if that price will, you know, go back towards maybe a traditional mean, or it will continue to go, you know, the way that it's going. And most people play pairs trades for them to contract off of a divergence, unless the divergence is that they're too narrow and they expect it to widen back out. We look at pairs trades as we would look at, they used to call them basis arb. We changed the name on the retail side to calling it a pairs trade. It's a directional play, but since price is not a mean reverting math equation, we look at the edge in pairs trades as having high implied volatility rank, and neither of these two do. So if I looked at this trade from a trading vehicle side, I would play it just straight as a contrarian. And again, I don't have any, there's nothing sophisticated behind that. I would just say, hey, PayPal's at the top end of its range, Square's at the bottom of its range. If you adjust these two, and this is the key to pairs trades, is having a reasonable notional adjustment. So the volatility of PayPal is 25, and I don't want to get too I don't want to get too much into kind of the numbers here. And the volatility of Square is it's just a little bit higher. It's about 37. So you're talking about if you're talking about notional equivalency, okay, so it would not be quite 2 to 1. It would be like 1.5 shares of Square to every 1 share of PayPal. And that's because what we do is we adjust for notional size, a $65 stock versus a $115 stock, and we adjust for volatility, 37, which is the implied volatility of the at-the-money options in Square, to the implied volatility of the at-the-money options in PayPal, which is 25. So we adjust Square accordingly, and then it's 1.5 to 1 would be the ratio. So you have a 0.64 correlation, you have a 1.5 1 to ratio, and if it was us doing this, because it's not really an option trade, we would be selling PayPal and buying Square, which would be the exact opposite of what you would do, but only because we're just contrarians, not for any. I have no other kind of valid reason. I have no fundamental reason. I have no technical reason. We would just look at it and say, hey, this divergence is it the widest it's been since the inception of Square? And that's it. I don't have any.
The irony, Tom, is I'm a contrarian as well. It wasn't until I built this fundamental model that I felt I had the tools to really trade directionally in a big way.